Hey guys, welcome back to my channel. So in this video I'm not going to be going over the trades I took or anything of that sort. I actually want to start a new series on this channel where I just explain certain indicators and certain concept in Forex. So this is probably going to be like the part one of it. So this video is going to be going over what an RSI is and why it's one of the most important and it's one of the most successful indicators. Not only quantitative traders, as traders in Wall Street and Main Street and James Street use, but also retail traders as well. So what is an RSI? According to Fidelity, the Relative Strength Index, or the RSI, developed by J. Wells Wider, is a momentum oscillator that measures the speed and change of price movement. The RSI oscillates between 0 and 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. Signals can be generated by looking for divergence and failure swings. RSI could also be used to identify the general trend. So in my terms, pretty much what that is explaining that RSI is an indicator used to show the speed and change in price from a range of 0 to 100, with anything above 70 being considered overbought and anything below 30 being oversold. So again, it's probably just a useful indicator that could help you decide whether market trends is about to change depending on how far above 70 or how far below 30. But sometimes during like strong trends, the RSI may stay overbought or oversold for a long period of time. According to Fidelity also, RSI also often forms chart patterns that may not show on the underlying price chart, such as double tops and bottoms and trend lines. Also look out for support and or resistance on RSI. So I'm gonna go to charts, and pretty much what they're explaining is certain price actions. So for example, right here we can see a divergence. So it's a bearish divergence, and if you don't know what that is, I forgot the name of it, but it's one of the bearish divergence. I'm gonna put up a screen of which one it is, but pretty much is when one part is higher than the other part, which supposed to lead to a huge sell-off. And as you can see from the RSI, that's pretty much what happens. And if we look down here, it's bullish divergence right here, this and this, which eventually led up to a bullish movement. So yes, the RSI does have those things, but I necessarily don't trade the RSI like that, or I don't usually trade the RSI in general, so I might not be the best person to explain that concept. Also, the Fidelity adds by saying in an uptrend or bull market, the RSI tends to remain in the 40 to 90 range, with a 40 to 50 zone acting as the support. And during a downtrend or a bear market, the RSI tends to stay between the 10 to 60 range, or with the 50 and 60 zone acting as a resistance. These ranges will vary depending on the RSI settings and the strength of the security or market underlying trend. But also, as we mentioned earlier, although when you're buying prices between the 40 and 90 range, anything that's 70 and above is considered overbought. So you don't really actually have a lot of wiggle room. You have more of the 40 to 70, and if we're being honest, 50 to 70, because according to Fidelity, the support zone is usually between 40 to 50. So I'm gonna take the worst end of the support zone, which is 50, and the least end of the overbought zone, which is gonna be 70. So you technically have 50 to 70 to work with. When I used to use the RSI was what I actually paid attention to, and vice versa. When whatever you're trading is selling, RSI according to Fidelity usually ranges from 10 to 60, with 50 to 60 being the resistance zone. And remember, 30 is considered overbought, so technically speaking you only have between 30 to 50 to work with when it comes to price selling. At least that's how I used to look at it when I did use the RSI. So then the next question would be, how would I use the RSI? I personally use example to show how the RSI works and how you might be able to use it with price action as well. So guys, thank you for watching. If you're new here, subscribe, leave a comment on any questions, thoughts, concerns, anything you want to add. Like the video if you like it, and I'll see you guys next time.